Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping back down into the world of Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video. What we'll do is we'll kick things off with our hourly charts. So Bitcoin paired up with the USDT. We're using the 1 hour chart here and Binance as our data source. Now, what's really interesting is the last time that I kind of did a Bitcoin video update was just before I was heading out to Dubai, and I'll probably talk more about the kind of the Dubai stuff later this afternoon for anyone who's interested. But obviously, you know, we were talking about a move to the upside. We were targeting out the areas between 35,789.59 and the higher side at 36,630. This is the fifth wave high point. And it looks like we achieved that, right? We wicked up here. We had a high on the 35,984.99. You can see it right there, the most recent week high that you see. Now, we were actually tracking a triangle move here, and it looks like we had this tiny E wave. It's so unpredictable that it's one of those. It looks like it was probably, it has to finish here. So it could be that D wave pushed up a little bit and then we fell down into the E here. But ultimately we had the triangle, and then we got this breakout to the upside where we hit what appears to me like a diagonal ending just up there onto the final fifth wave movement. So that structure's all complete and can be put to bed now. So let's go ahead and just tidy out some of these numbers. We don't need them on there. I'm just going to make this really simple so that we can kind of see exactly kind of what was happening. That's a fifth wave high point, right? So what happened afterwards? Well, after we saw this, we had this breakdown. This is an interesting breakdown because it does look like it's impulsive, but I don't think it is. So let's go ahead and do our due diligence here. I mean, it has the characteristics of it, but if I take a look, yeah, it's basically a W, X, Y, X, and Z. So it's a corrective move. So W, X, Y, up for X and then down into Z, right? And so it looks like it's five waves, but it's not because it doesn't meet the requirements of a five-wave impulsive pattern. It can, of course, be diagonal. That's the only other way that this could potentially go. And looking at that kind of diagonal move, it would have to be your standard. It would have to be a standard diagonal. And I don't think we could even really... I don't know. In fact, I don't think it hits the rules for that either, just thinking about them all. So no, I don't think that. So I think it's ultimately just W, X, Y, X, and Z, no diagonal pattern. Interesting. Then, of course, we start this move upwards. And for here, this isn't actually too difficult to kind of see. We had this interesting break right here, this most recent move. This is an interesting one. So if we just grab our fibs here and pull those in, again, you hit that 1.382, not on the 1.618. This is a five-wave pattern here, though, based on a small wave 1, 2, 3 into a fourth at the moment. If we break up into a little bit higher, we could start looking at this as a five-wave pattern, but it does overlap, so it's not going to be an impulsive pattern. It would have to be a diagonal of sorts. And I don't think really that's a good place to be either. So for the most part, we'll probably look at it as a W, X, Y, X, and Z. So if we go ahead and throw that in here, it will look more likely to be W, X, Y, X, and Z again, all corrective. Now, what's interesting here, the most interesting part anyway, will be whether or not a double top is going to be where we kind of find the resistances. Now, if I go ahead and just throw this in and pull this across, this area is the area of major selling pressure, right? This is where the supply is coming in and basically suppressing the price. So you can see here that we tapped up into this fifth wave high. I had our Y wave here just tap into the same range, but unable to close above that low being 35,678. So unable to close above 35,678 is basically indicating a lot of selling pressure within this range, the range being 35,678 to 35,984. And so this area is going to be my area of interest because it allows you to do some pretty decent trades, right? For example, we tap into here again, we can basically put our stop loss above that swing high, and we can basically start to take profit down here, maybe on the 200 EMA. This gives you a really good risk reward ratio. So minimal risk, high reward, right? We like low risk, high reward situations. And so they're going to have an opportunity within this area here. Now, of course, if I am to trade, I'm going to be trading on BitGet. It is my go-to platform for leverage-based trading. Obviously, all the affiliate links are in the description down below. So if you haven't yet checked it out, I do encourage you guys to check out all of the affiliate links in the description down below, because they do essentially allow you to have the most amount of exposure to these assets classes and these exchanges, and it minimizes your risks when it comes to whether or not a platform is going to collapse, go into liquidation, go bankrupt, or whether there's so much demand you can't log on to a platform. So having access to multiple allows you to have maximum amount of choice as to where you want to be doing your trading activities. Now, obviously, trading, and specifically with leverage, but generally cryptocurrencies, is high risk. So it's important that you understand all the risks that are involved when it comes to trading cryptocurrencies, all the usual things that you hear, which are very important. If you do choose to invest in cryptocurrencies, be prepared to potentially lose your entire investment, all those kind of things. All the information and details are found in the description down below. So do check that out if you are looking at trading or looking at cryptocurrency exchanges. Do your own research, all that kind of stuff, and all the links are, and all the information is in the description below. So we have opportunities on the hourly chart. Now, we are down in this oversold area, so we are looking for a long position on Bitcoin. We are looking to go long here. We have the 50 EMA and 50 SMA here also acting as potential support here, so for this next move upwards. But like I say, I'm expecting us to get rejected on this upper range double top kind of situations. Now, take this to the daily. You can see here that this is the classic reversal pattern going on, right? So we have higher highs and higher lows here coming in. This is a classic reversal. So just prepare yourself for what that might mean. Now, it doesn't necessarily mean it happens instantaneously, because I expect us to actually push on up before we move on down a little bit. We may even have a new higher high here at some point before we actually start to see this move back down. So just bear those things in mind. We got 2 touch points on the top at the moment, 3 at the bottom. Chances are that we're probably going to actually tap that top range once more before moving down. So just bear that in mind. We're oversold. It's not a big indication that we have to go up, but it's stacking probabilities saying that we're more than likely going to be going long here. It kind of ties in with the hourly chart a little bit as well. So just bear that in mind. Ultimately, though, a fair value gap is down here on the daily. This is one we spoke about before, $30,248 to $32,832. This is the fair value gap. I expect us to move down here at some point. Might not be right away, might be next week, might be the week after that, but I'm expecting us to move down here regardless. Ultimately, we do not really see a lot of good structure here. It's all very corrective. And of course, if I throw in the volume profiles here, you can see that volumes in March of 2023 were so significantly higher than they were going forward. We have very little and low volume. So as price moves up with a volume profile moving down here, this is typical reversal stuff. This is more of a distribution than it is an accumulation. So just bear in mind, this is not a positive site to be looking at here on volumes. Now, this is a very consistent and common thing when we take a look at volume profiles across different exchanges. Now, the only thing you want to bear in mind here, guys, is that I know there's a lot of people maybe saying that no one really uses Binance anymore. I still want to say that it is top in terms of trading volume in the last 24 hours consecutively, day on day. It isn't that people are not using Binance here. It is that there isn't really a lot of demand for Bitcoin. People don't want to hear it, but the data is right there if you choose to look at it. And for the most part, volume profiles are incredibly low. This is pretty general, like across the board. We can see volumes are so significantly down in the last kind of 6 months or so. So to kind of think about price continuing to push up without that kind of volume profile is quite alarming. Now, as we kind of jump into this, you can also see here, more divergence, even over just the last few days. We have a spike in volume taking us up higher. Volume profiles drop down, yet we have a new local high. Okay, so new higher high while volumes are decreasing. This is distribution. This is not accumulation. So just bear these things in mind. Okay, so that's the daily time frame. Really cool stuff going on there. Now, as we take a look on the weekly weekly, you can see here, my thoughts are that we still have to have a natural correction to the downside. Obviously, we have that really bad, fearful kind of bearish situation where we come down to like, 14,000, 15,000, 13,000 USDT. Ultimately, though, realistically, I just want to see what happens when we come back down to the area of $20,000. Okay, this is an interesting point for me because we do have a CME gap down at this range, and we've just taken out the higher CME gap, and now this is the next CME gap on the chart. Now, we don't always have to go down and fill out those CME gaps. However, there's only two on the entire historical chart for Bitcoin. If I go ahead and show you this, right? So you can see we just grabbed this one at the top here. Okay, we grabbed this CME gap, and there's only this one at 20,330 and 21,110, and then there's one down here at 9,665 to 9,925. All other CME gaps in the entire history has been filled. This is the weekly chart. Let me throw it onto the daily chart, right? All other CME gaps, and there's a lot of them, you can go through this, have been filled. Okay, so the only two that are remaining are those, and the next one really is this one here at 20 to 21,000. So I think price has to come down into this range. It's going to be interesting to see what happens when it comes down there, as to whether this is going to be our key support lines. Ultimately, a good support to be found right about here at 19,313. This will be really interesting to see whether or not that turns into good support where we bounce from, and this is actually just where we end up moving to the upside. This move to the downside for Bitcoin would be disastrous for many retail investors who are invested in altcoins. Ultimately, we are talking about a 40 to 44%, 45% move to the downside on BTC. That will basically destroy alts at the same time, and basically we'll see a huge wealth transfer. So that's kind of my expectations, right? I'm not looking necessarily for a new lower low at this point. It's still possible, of course, technically speaking, but I am looking for us to come down to that CME gap. I am expecting a 40% reduction in Bitcoin's price, which is a very healthy thing to see. Okay, it's not uncommon. Let's go ahead and actually bring up our USD chart here, and you can see that even after all of these fantastic runs to the upside here, so take the 2019 run to the upside down into that initial kind of move, was a 53%, right? That was that was pre-pandemic, right? So a natural healthy correction of 53%. We started rallying out of here, and then the pandemic brought us down into the new lows, right? However, this kind of move to the downside is very much expected, okay? And we can see it time and time again. There's always these healthy corrections coming on down. If we take a look here, back in 2015, we had more common movements of around 37%. And I say common as in they were really common. They weren't just kind of happening here and there. There's 40% moves happening all over the place, right? A 40% reduction in Bitcoin's price is pretty common if you actually take a look at the history. 2021 was such an easy bull market. It barely had any corrections in it whatsoever. But if we're taking a look here at 2017, you can see just the amount of healthy corrections that were coming. And they weren't small corrections either. They were pretty hefty corrections. So for example here, you can see I just drew a load up, right? We had 37%, we had 41%, we had a 40%, we had 33%, 38%, 40%, right? And then of course 53%. Even if we take a look when we were in April here of 2021, we had a correction to the downside here. Again, this was a move that was 55%. And so all I'm saying is that we've had this move to the upside, and profits need to be had. Now we can see here we've had a couple of moves already at 21%, which it really isn't cutting it in comparison, 20%, and over here we've got a nice easy 22%, right? We've had very, very small corrections or very small moves to the downside to counter the upward movements. And to be honest with you, it's very against the historical movements. I know a lot of people kind of say, look, history is repeating itself, it's a cycle, etc. Well, if history tends to repeat itself, we need to take into consideration that the most common, on average, the most common retracement for Bitcoin after a significant surge to the upside is 40%. And so a 40% reduction gets us right into that CME gap area. And, I think ultimately that's kind of where I'm looking for Bitcoin to kind of get its kind of next levels of support where we can actually then rally on up into the proper bullish market. So just bear these things in mind. Like ultimately, I'm objective. I want us to be in a bull market. I want us just to go up. I don't want us to go down. But I do think that essentially we have to kind of prepare ourselves for what is due to happen, and that will be a move down, in my opinion. Now, what will be the catalyst for that? So many different things. Just pick one. So many things happening in the real world, and so many things can help push this price to the downside. But ultimately, I'll leave that for you guys to be speculating on down in the comment section. Let me know what your thoughts are down below. If you found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.